हेलो।
हाँ जी।
कलिन, कैन यू हियर मी?
यस यस, एकदम परफेक्ट।
ओके। मेरा कुछ तो इशू था।
गौरव जी से बात हुआ?
हो गया सर।
ज्वाइन कर रहे हैं?
हाँ, वो ज्वाइन कर रहे हैं। उन्होंने 2 से 5 मिनट बोला।
प्रमोद जी विल स्टार्ट शार्प।
यस सर, वी विल स्टार्ट शार्प।
10:31 हो गए हैं।
कलिन, कैन यू
या
हियर
हाँ
मी?
जी।
यस
यस,
यस।
एकदम परफेक्ट।
ओके। मेरा कुछ तो इशू था।
गौरव जी से बात हुआ?
हो गया सर।
लाइव कर दिया आपने?
कर रहे?
हाँ, वो ज्वाइन कर रहे हैं। उन्होंने 2 से 5 मिनट बोला।
प्रमोद जी विल स्टार्ट शार्प।
यस, वी स्टार्ट नाउ। आई मीन
31 हो गए हैं।
ओके।
किसी का जूम वो चल रहा है, यूट्यूब बंद कर दीजिए प्लीज।
वो मेरे में ही सर चालू था दोनों, मैंने बंद कर दिया। अभी सबको ले लो अंदर।
हाँ, ले लीजिए। गौरव भाई वेटिंग रूम में है, प्लीज उनको अलाउ करो।
कर दिया सर।
Thank you, Ji. Good morning.
प्रमोद जी लेट्स स्टार्ट।
गुड मॉर्निंग गौरव जी।
Good morning, Pramod.
Welcome everyone to this webinar on Decoding Union Budget 2025. We all have seen wherein government has announced a plethora of changes in both direct taxes and indirect taxes. They've also announced that new direct tax code bill will be introduced in the parliament next week. So this surely ensures that we have interesting time ahead with lots of learning and of course more litigations. So with that, this webinar is organized by Ashwa Legal Advisors LLP, which was founded in 2017 by our founder partner, Advocate CA Dr. Avinash Poddar and Advocate CA Achal Poddar ji, and other partners in the firm being Shefali Gadharwal, CA Vishal Poddar, Shailin Doshi, CA Ashu Dalmia ji, myself, Advocate CA Pramod Dokania, Advocate CA Amish Gandhi, Advocate CA Avdesh Sharma. These are our partners. We, as Ashwa Legal and is a national level boutique law firm providing legal assistance and litigation support in the area of taxation, both indirect and direct taxes, PMLA, Benami, all sorts of corporate laws, including Companies Act, IBC, SURFACI, and other statutes, litigations, and legal services. Our offices are at Surat, being our head office, and branch offices at Mumbai, Delhi, Pune, Ahmedabad, Nasik, Vadodara, Faridabad, Gurgaon, Rajkot. And along with that, we have our network associate offices across India, and we continue to grow our network associate. We have a network associate policy wherein we partner with our associates and we both give and take both in terms of assignments and knowledge transfer, including handholding. So any of you interested for the network associate may get in touch with any of us and we'll be glad to share more details. With that, I will move over to introducing our speaker today. I think on the indirect tax portion, we have Advocate CA Gaurav Gupta ji, who is a distinguished advocate specializing in indirect taxation with over 24 years of experience in litigation and consulting across various industries. He is a graduate of SRCC and Delhi University and a chartered accountant. He holds an LLM from OP Jindal Global University and a doctorate in taxation from University of France. He has served as head of taxation in one of the listed group company and worked with tier 1 consulting firms, advising Fortune 500 companies. He's an accomplished author, has written several books on GST and service tax, And of course, he's a prominent speaker, having addressed over 900 seminars on indirect taxes. With that, I would welcome Advocate Gaurav Gupta ji and hand it over the mic from here. Thank you.
Thank you, Praveen bhai. A very good morning to all of you. I am at the outset grateful to Avinash bhai. This is actually my first analysis lecture deliberation on this budget. So forgive me for some gaps which I might leave, which definitely Avinash bhai will fill. But I can tell you, when you listen to the budget session, you are disappointed that nothing much had happened. But the grace of God is unlimited. When you read the finance bill and the memorandum and then the accompanying notifications and circular, the disappointment goes, because again you find that there are a lot of things which were not discussed and which has come up in these finance bill clauses. Even though the clauses are very limited, but the implications thereof is very, very wide, as I can see. And I must congratulate all professionals that you have another year of sleepless nights with more work, more compliances, more new forms to understand, and yes, definitely more clients coming and troubling to your offices with more notices in the coming 1 year. Now, why am I saying these words? We have had an era of 2A, 3B in past that went up to 2021. Then came the e-way bill compliances. And after that, there were restrictions which were imposed in 2B, I think. Thereafter, now, there is a strict and stringent policy which government is moving ahead towards. And it was very saddening to see a very new mechanism which was introduced now by this particular budget, Finance Bill 2025, in form of Section 148A, very uniquely called track and trace mechanism. So at the outset, there are almost 14 clauses relating to central GST, which I'll be speaking today on. My session time, if Pramod bhai, if I'm not wrong, I'll take around 45 to 1 hour, 45 minutes to 1 hour, or should I
Yes,
shorten
sir.
it up?
Yes, sir.
Right, sir. So I'll try to keep it within the timelines and try to fill that time frame. So 14 clauses. I'll start with the most important and major one, which is the track and trace mechanism. Now, my dear friend, this section 148A, which has been introduced in this particular finance bill, read with section 2, subsection 116A, which defines the heart and soul of this particular mechanism, unique identification marking. Now, what exactly is this? We all remember that we had moved to self-assessment mechanism over the past 2 decades, with the spirit that the government has believed that the taxpayers are honest, and therefore the so-called Inspector Raj was put to an end 2 decades back. Now, this track and trace mechanism questions the very approach which we have been following for 2 decades, and now is imposing a condition, a restriction, a marking, a checking on the very goods which are being dealt with by these suppliers. So again, from a self-assessment mechanism mode, we are moving towards a check and balance system where the marking is being introduced on the goods which are being sold, supplied, moved, stored. I'm not merely saying supplied. Even if you are manufacturing, you are storing, you are handling, you are transporting, you may be one of the persons who will be specified and required by the government to put a unique identification marking on those particular goods, and those goods should bear that particular marking. Now, this term unique identification marking, section 2116 has been introduced, 116A has been introduced. Unique identification marking, in a very simple term, you have to remember 3 words: unique, secure, and non-removable. So there is a marking, there is an electronic marking, maybe in form of a QR code, which will be required to be put on every goods which are supplied, stored, dealt with, by a specified category of people. And that particular unique code will contain the information which is, required to be put into that particular code by the government. So let us suppose we speak about, and this is one of the most possible products, the tobacco products, the pan masala. So the pouch might contain a QR code kind of marking, which government requires that where it has been manufactured, what is its unique number, what date it was manufactured, what is the total quantity of that particular batch, what is the batch number, when was it, what is its expiry, and what is the likely date of its movement from the supplier. Now, with these all information, it is very easy to put it into a QR code. Now, the product is manufactured, the machines after manufacturing will be required to put this unique number. Now, very interestingly, the compliance in terms of putting the unique number has not been left to the manufacturer. There will be a specialized agency which will provide that system for making this particular marking. And where am I coming this from? This is coming from two places. Number one, 148A3, subsection 3, clause D. It requires that the person who is so specified shall pay such amount in relation to the system referred to in subsection 2. So that particular system, there is a payment which will be required to be made by that particular person. So payment will be required to made to whom? It will definitely be to the agency which will be providing that system and which will be duly appointed by the government. So it is again a kind of a check which will be placed at the positioning of the supplier. Now, this is all about that particular marking which is required on that particular product. So pan masala pouch having that particular marking, maybe in case of scrap dealer, not scrap dealers, I would say, these smelters who convert the scrap into some ignots. Maybe that ignot might require this kind of a marking. So every transportation which will be happening of such products on which this marking UIN is required, they can be at any point of time, whether at transportation, storage, or at any shop displayed or being sold. The product can be scanned by a handheld device by the officer. That's the whole idea which I believe. Now, where am I coming from? The second positioning, that this will be a third-party system. It is from the very fact that if it is given to the same supplier, there are chances that he will manipulate and may clear the same goods, meaning thereby there will be two different manufactured goods having same unique number going to two different territories, whereby on one he has paid the taxes, on the other he has cleared without payment of taxes. Now, after 2 months, you cannot gauge that where that particular product has come from. But having said so, the specified category of people who will be dealing in that particular product will be required to also make a huge compliance in terms of furnishing the information and details within such time and maintain such records and documents and in such form and manner as may be required by the government. So kindly please appreciate the quantum of data which is now going to be on the GSTN in terms of those particular goods. So it might start with one industry, may spread across different industry, but at the end of the day, the whole idea will be when the system or the GSTN will be so robust that every product in the country is duly tracked and traced, mentioned, reported, and traced. Where exactly is it right now? Unless it reaches the final consumer and is consumed, thereafter, the credit will not move. So if I want to track and trace the goods, I am basically tracking and tracing the input tax credit. So this is the whole idea of this particular mechanism. But yes, I can tell you a lot of compliances, a lot of checks and balances are foreseeable on this particular mechanism. Now, we already have a e-way bill check. We already have a GSTR 1 check. We already have a GSTR 3B check. We already have the restrictions which are being imposed in 38. We already have the return filing restrictions in 39. Apart from this, this is one more reconciliation which professionals in the coming times, because every unique number which is missed to be reported will require to be answered by the manufacturer or the supplier, or for that matter, the person dealing in such particular goods, to the government, that why this particular number is missing. Now, this was all about track and trace. Let's see who all are covered in the coming days. If someone is not complying with it, now there is a penalty which has been specified under 122B, 122B. So this is a newly introduced section. I would love to read it verbatim, notwithstanding anything contained in this act, where any person referred to in clause B of subsection 1 of section 148 acts in contravention of the provisions of the said section, he shall, in addition to any penalty under chapter 15 or provisions of this chapter, be liable to pay a penalty equal to the amount of 1 lakh rupees or 10% of the tax payable on such goods, whichever is higher. Now, it is only in respect of such goods where there is a contravention. Contravention will be in form of two. Number one, failure to make a marking. Number two, reporting the requisite information to the government. So if either of the two things are not done by that particular specified person, the penalty can be imposed by the government. Now, friends, when these particular goods which are without marking will be found, there will be a huge multiple chain which has already transferred hands in terms of movement of those particular goods, including the transporter, the warehouse person, the distributor, the manufacturer. To whom this will be applicable, that is something which we will have to see, because when the goods will be found as not having that unique number, the entire chain will be under scrutiny. So kindly bear these points in mind. A lot of cautions in future if someone is into dealing of these specified goods. Now coming back, coming on to the lighter topics, input service distributor, we are waiting for the introduction, a mandatory application of input service distributor. What is an input service distributor? The definition I'm not going into, but the dilemma, the issues vis-a-vis cross-charge still remains live. So input service distributor, cross-charge, and supply between the branches. I have always said these are three different distinct terms and should be read synchronously, cannot be intermingled, because input service distributor is a very unique power given to a particular branch to distribute the ITC to the branches to which the input tax credit relate to. So input tax credit does not relate to that particular head office or branch. It relate to someone else. And you as a custodian are giving that particular credit to that particular branch. Now, the power to distribute the credit not only on the invoices, which are given by the suppliers under 9(1), even the credit of the invoices on which reverse charge is supposed to be paid under 9(3) and 9(4). That particular power has also been given or introduced by the last budget, now extended by this finance bill. The input tax credit, which is paid under reverse charge under integrated tax, under subsection 3 and 4 of section 5 of IGST Act, has been added to this particular power of distribution of this particular input service distributor. Not going into much, but the question which still remains is the requirement to pay the taxes. So Vishal bhai can compliment on that if something is to be added. I can see Vishalji is also there. The requirement to pay the taxes is by the distinct person in the same state in which input service distributor is there. So for example, I'm in the state of Maharashtra, or for that matter, let's say Gujarat, Ahmedabad, and Surat. So Surat, we have the branch which is under forward charge. Ahmedabad, we have the branch where you are registered as an input service distributor. In terms of reverse charge invoices under 5354, or for that matter 9394 of IGST and CGST Act respectively, the reverse charge tax will be paid by the Ahmedabad branch, sorry, the Surat branch. And the input service distribution of that particular credit will be made by Ahmedabad branch. because it is the input service distributor. So ideally, the Surat branch should have raised an invoice on Ahmedabad branch, which is the ISD, and then the Ahmedabad branch will distribute it. But when you are introducing the very provision here, then that particular mechanism of linkage by way of an invoice, I would, at the compliance level, I would like to see that how will that work. Let us wait for some more time to see this. Another important deletion, which is, in terms of the clarification which was recently introduced after the 55th GST Council meeting, vouchers, they are not taxable in the hands of the person who is dealing in such vouchers. Now, vouchers has been categorized into two categories, which is prepaid instruments, which is equivalent to money recognized by RBI, Amazon gift cards, or for that matter, the Sodexos, all of them are PPIs. The second category will be the vouchers which are actionable claim. So even if you are not into a PPI, but if someone buys a voucher from you and give it to another person, it is still qualifying as an actionable claim and will not be exigible to GST. That was a clarification which came, and therefore all the vouchers have come out of the ambit. Now, voucher is something which entitles you to enjoy a particular supply of goods or service of your choice, and should uh, basically denote the value proposition, the money with which you can buy that particular goods or services. There will be one problem which I can foresee: the differentiation between the vouchers and the advance for a particular supply. So if a particular voucher is only allowing you to buy or enjoy a particular service, so maybe a buffet, a dinner, a room in a hotel for one night, all these specified kinds of so-called vouchers for a particular service may not fall exclusively within the category of voucher in the hands of the supplier. Maybe for the subsequent person, it will definitely be. But for the first person, though he is selling a voucher, but it is in form of a advance for services. So just keep that particular proposition in mind. So while government by way of circular has already clarified that vouchers are not taxable, they have also parallelly now deleted section 12, subsection 4, section 13, subsection 4, which was defining the time of supply for vouchers, as when there is no exigibility of tax or GST on a particular item, there is no need to define the time of supply, which is only a procedure in terms of when to pay the taxes. Coming on to a very simple, known, anticipated amendment, which is 17.5D C. My humble apologies. The phrase plant or machinery, phrase plant or machinery in clause D has been amended with the phrase plant and machinery, and it is retrospectively put in. We all understand that we had a celebrated judgment of Safari Retreat. Safari Retreat differentiated, Honorable Supreme Court only differentiated on these very phrases, that plant or machinery does not equate to plant and machinery, which has been defined in the explanation to section 17, subsection 5. And accordingly, the definition will not apply to 17.5D, where the phrase plant or machinery is there. And this particular phrase, plant or machinery, will be read in a wider ambit in light of the judgments which has already been there, or in the past. More particularly, three judgments were discussed: Taj Mahal Hotels, Karnataka Transmission, and Anand Theatres. So, keeping the circumference within these three judgments, the Honorable Supreme Court said plant or machinery, even a building can qualify as a plant provided it satisfies the functionality test and also the very condition which is laid down in section 17, subsection 5. So two conditions it has to satisfy. My dear friends, while this amendment has now been made 17.5D, retrospectively will be read under plant and machinery, two questions remain: whether this substitution should be prospective or retrospective. Number two, the challenge in terms of any plant or machinery or any other goods which is movable, more particularly, which is in the light of the recent Honorable Supreme Court judgment again in the case of Bharti Airtel, where the telecommunication towers are held as movable. Now, keeping those particular things in mind, any property which is movable does not fail or is not a victim to Section 17, subsection 5. It is only when it qualifies as an immovable property. Thereafter, the application in terms of 17(5)(c) and D restricting the input tax credit and the exclusion that if such particular immovable property qualifies as plant and machinery, that particular exclusion will apply. So kindly keep the chronology in mind. Just don't rush to seeing at plant and machinery and applying 17(5)(c) and D out the outside. Not I'll not go in detail because topic today is not Safari Retreat and ITC. Now, having said on the ISD voucher track, very important observation which the 55th GST Council meeting, when they mentioned that they are reducing the penalty under 120 on the filing of appeal under 129 from 25 to 10%. It was not a very welcome move because at that particular point, I anticipated that the penalty will now be, all penalties will now be required to have a pre-deposit in case they are supposed to go under the appellate procedure. So now in line, section 1076, 1128 have been amended. If you are going for appeal against any penalty, then you are supposed to pre-deposit 10% of such penalty amount before the first appellate authority, and then it will be filed. It is not a case of admission, my dear friends. It's even a precondition for filing an appeal. Now that waiver power is not there with the first appellate authority, and for that matter, the tribunal. In very exceptional cases, the courts will intervene. But that 226 power, again, we have divided views on that. So I'll not, I'll not go into it, but please do remember penalties under 122, under 122(1)(a), all of them will be covered. And even if you have recently handled or represented the cases where only penalty under 122(1)(a) has been levied, imposed, then in order to go for appeal, this provision is yet not enacted. Right now, you will not be required to make a pre-deposit. Once it is enacted, maybe in 3 months or 4 months, or maybe 6 months. After that, any appeal which is preferred against an order confirming such penalty, then you are supposed to pay that 10%. You can be quick in terms of filing your appeal for next 3-4 months in cases where there is only penalty. But in case there is a tax, interest and penalty which is being levied, imposed, in those particular cases, 10% of the tax amount only will be required to be deposited. Yesterday, one question came before me that a gentleman has been given a show cause where he has, during the pendency of the investigation, he had deposited 2.5 crores. The show cause notice proposed a tax demand of 12.5 crores. And this particular 2.5 crores was deposited during the pendency. The final order stated that the demand of 12.5 crores has been confirmed and 2.5 crores which was deposited is now appropriated towards that demand, and the balance net demand of 10 crores is demanded from that particular person. When you are preferring an appeal against this particular proposition, then in that particular case, your pre-deposit will be on 12.5% crores, which is 1.25 crores, which is already deposited by such particular person in form of 2.5 crore during the pendency of the investigation. So you are not required to deposit again on the balance 10 crore or 10% amount. Now, friends, 34(2) credit notes. Again, it is always easy to issue a credit note, but then the conditions of section 34(1) has to be kept in mind. Now 34(2), apart from the conditions under 34(1), where the credit note can be issued only in 3 cases, and that too by the supplier, not by the buyer. 34(2) has reinstated the condition that the reversal to the supplier will not be allowed unless the buyer has reversed such input tax credit. So recently I was told that there is a mechanism which has been introduced that if a credit note is put by the supplier, the buyer will either accept or reject the credit note. If he accepts the credit note, the ITC reversal will be made on the part of the buyer. And if he rejects, then that particular liability will be added to the subsequent month's liability of the supplier. So this credit note mechanism has been sort of put into a watertight compartment between the supplier and the buyer by the government. And every credit note either will be having a tax reduction in by the supplier, will have a corresponding input tax credit reversal by the buyer. If it is not by the buyer, then supplier cannot enjoy the reversal. Now, my dear friend, please do understand that the reversal by the supplier is independent of the conditions of 34(1). So even if both buyer and supplier, I give you a cash discount and you have reversed your ITC, and I am reversing my supply, the output tax on the supply by way of this credit note. My dear friend, this does not fulfill the condition of 34(1). So even if both buyer and supplier have reversed, the supplier will then again have to bear the brunt of paying this particular tax on the credit note because he failed to fulfill the conditions of 34(1), though he has mechanically fulfilled the conditions of 34(2). So when compliances come in, my very learned friends, I understand we all cannot look into these particular credit notes day in, day out. So many of the team members are not aware, many of the clients are not aware. So this matching concept should be read with 34(1). That is something which you have to sort of educate your team and your clients. Now, coming on to the another important change, there is a auto-generated statement in 38. Now, this is also some amendment which has put me into some deep thought that what's next in the platter. So earlier under section 38, subsection 1 and 2, there was provision that whatever I will put into my GSTR1, that will be auto-generated into a statement and will be visible to my buyer. So Avinash bhai, myself, let's suppose we have given supplies to Shelin, and Shelin bhai has valid tax invoices with him. 16 to AA required that even though he has tax invoices, despite that, our supply should be reflected in the statement of purchases, which is reflecting on the portal of his. So that can only be done when we both have put those particular supplies into our outward statement of taxable supply. Statement of outward taxable supply. Now, interestingly, this was all automated. This budget has removed the term auto-generated and put it as a simple statement. Now, what does it actually referring to? I cannot give a comprehensive answer as of now. Maybe I am missing something. But what I can visualize is there may be now an intervention of the officer in certain cases. Because if you all remember, there were the statement where there are two categories of invoices which was introduced in last to last finance bill. One where the credit is available, the other where the credit was not available, where 5 conditions were prescribed under the law, which has now been extended by any other condition under 39. Those 5 or 6 conditions which were there, their prescriptions are still pending. I am not going into their wires because I know once they will be affected, there will be a lot of constitutional challenge to these particular conditions. But having said so, living that these particular conditions are live, the statement was still auto-generated by the computer system, the GSTN. That auto-generation has now gone. So there may be an intervention of the officer in terms of further putting those particular or introducing those restrictions in the ITC available to the assessee. So let us see in coming days how that will be worked out, because manual intervention in such a huge system, I don't foresee. But auto-generated, if it has gone, I think I might be missing on something which Vishal Bhai or Avinash Bhai will fill in this particular space. It requires actually some out-of-box thinking. 39, again, section has been amended, though conditions and restrictions have been brought prior to this amendment. But section 39 has been amended to state that the filing will be within such time and subject to such conditions and restriction. So again, we have the situation where the cart was before the horse. Now, with this amendment, the condition and restriction have got a legal sanctity, legal validity. I'll speak on the last amendment, which is in relation to SCZ and FTWZ before clearance. Now, my dear friend, this particular amendment has been again made retrospective. It's a relaxation given to the taxpayer. These supplies which are made by the SCZ or the FTWZ, which is Free Trade Warehousing Zone, when such supply of goods is made before clearance for exports or to domestic tariff area, and such particular goods were warehoused in SCZ or FTWZ to any person, such particular supply will be deemed to be neither supply of goods nor supply of services. Now, very simple proposition. I am a unit in SCZ. I am supplying to another unit in SCZ, or for that matter to the DTA. My supply will not be considered as either supply of goods or supply of services. And this is retrospective from 1st of July 2017. Now, two key terms are very, very important. Number one, supply of goods warehoused in a SCZ or in a FTWZ. So it is not by a SCZ, because a SCZ is merely a unit. It can house its goods within SCZ. It can house its goods outside SCZ. And same is the case with FTWZ, because FTWZ is merely a branch or a space taken, allocated space taken by a person who is having a office in DTA. So it may be a situation where I have goods in FTWZ. I don't have a registration in FTWZ. I am in Delhi. I am making a supply of those particular goods to another person before clearance for exports or for before the supply to DTA. In that particular case, when it is a case of supply from SCZ to SCZ, SCZ to FTWZ, any such scenario, in those particular cases, it will be taken or deemed to be supply, neither supply of goods nor supply of services, provided the goods are located in SCZ or FTWZ and not by SCZ or FTWZ. So I think in 45 minutes, I have covered what I thought I will be covering, almost 40 minutes. I will not extend my discussion on any other point. Avinash Bhai, let me know if I have missed out something. Last point, sorry. Since it is a retrospective amendment, any tax which was collected by the government, that will not be refunded. So, भूल चूक लेनी देनी, जिसने जो दे दिया वो दे दिया. Don't go back to the government कि मैं अब इसका refund ले लेता हूँ. No sir. That particular person who is the buyer, I don't know whether he would have taken the ITC input tax credit or not. But the supplier, if he has paid the taxes till date, even though he was fighting for such particular refund earlier. Now, understand this very interesting proposition. I was a supplier, government demanded some tax on this kind of supply from me, and I paid that particular tax, but then my counsel told me that this is not taxable otherwise also, because there are larger propositions apart from GST Act. So I applied for refund, and now I'm fighting for that particular refund before the government. Till date, I was under litigation. But now with this particular amendment coming into place, this has become neither supply of goods nor supply of services, and also with the condition that the taxes which I have paid earlier on such particular supply will not be refunded to me. So that litigation, what will happen to it? Again, larger questions to that, but those remain unanswered. But yes, more barrier, more detriment for the taxpayers who have earlier complied uh, and were fighting in terms of getting those refunds. Maybe they will face a lot of problem because it is a policy issue of not giving the refund, but with the larger question that whether they were per se taxable or not, even if this amendment was not there. So with this, I thank each and every one of you for giving me a patient hearing. And again, thanks to Avinash Bhai, Ashwa, always a pleasure to be here. Please.
Pramod ji, if any questions are there, let me first ask my question.
Sure.
There
Avinash
is
Bhai
an
wants.
there is an amendment in 1076 and 1128, as you mentioned about that pre-deposit. What do you think, whether it is going to be retrospective or prospective?
No, so
They have added proviso. They have substituted it.
I understand that, Avinash Bhai, but पता नहीं, with my limited knowledge, I would say it cannot be retrospective, because once the appeals have been filed and admitted, how can you now challenge their admission per se? So,
Correct.
and prospective also, again, I'm repeating, from the date when it becomes effective. अपनी
True.
जिनको appeals file करनी है फटाफट कर दीजिए before the first appellate authority. 10% बच जाएगा. Second के बारे में सोचेंगे, अभी तो ट्राइब्यूनल नहीं है.
Correct. Pramod ji, if any questions are there.
I think a few questions. One is from Mr. Ravi Khemka. Sir, where credit note is issued for the return of material from transit itself, thus buyer will neither be taking ITC nor be reversing. How the supplier should do in this case?
Raviji, now you have a invoice which has been put into GSTR1. And more particularly in case of e-invoices, this is mandatorily will be going to the GSTN. Sorry, my bad in terms of procedure. I have to think kahan gayi wo invoice. So that has gone to the buyer in his GSTR2. Now please understand, the invoice is already there with you. Either you will accept or reject that invoice. And once you have rejected that invoice, the output tax liability, the other person is again, he will be having a choice to reverse. So either both invoice and credit note will be rejected, or both of them will be accepted to complete this transaction. But on a legal front, it was deemed to be a reversal, because the only thing which you need to demonstrate that the goods have returned in transit. That's a very interesting but very tough a proposition. I have already dispatched my goods from Delhi to Ahmedabad, and on the way somewhere you are giving me a call in Rajasthan that, sir, I don't need your goods. And as a very happy supplier, I'm saying, okay, I'm taking them back without giving any damage to my customer. Not a very easy proposition to understand. So that communication, that chain is required to be established. If per se the supply has not happened, you are supposed to issue a credit note in such particular cases also. So it is not a case where there is a supply which has been completed. It is a case where the supply itself is under challenge, and without supply there cannot be a levy of tax. I will allow both, the one who has accepted invoice and credit note, the one who has rejected both invoice and credit note. In both the positions, the supplier will be enjoying reduction in the output tax. Now, the difference between two of it, in case it is accepted, he will automatically reduce the tax. In case it is rejected, in such a position, he will have to go for a refund. He cannot automatically reduce his output tax liability. Just keep that in mind.
Okay. think same. Ravi ji is asking, would request for clarity again on ISD. I'm not sure what is the specific question on that, but
I think Avinash Bhai will definitely, his session is there.
okay.
So again, these points will be repeated. Some of the important points. I am refraining from them.
Okay. Sailor GST number was cancelled retrospectively July 2017, but his return is filed till financial year 1920. Department disallowed ITC due to non-existing person. What we do it? What do we do?
Tejas, is this question I think is a pain area for
Yeah.
almost 30% of the taxpayers. I can tell you that. And आप ये question budget session में पूछ रहे हैं. This very clearly shows that how painful this question is, because it has got nothing to do with the budget. This finance bill has got nothing to do with this proposition, but it is something which is being litigated across India. And just wait for some time. Bona fide taxpayers will definitely be saved. I'm not extending it further.
Okay. Ravi Khemka ji, sir, invoice related to past period, but credit note issued post IMS. I think
Ravi
that's
ji,
not.
I think you are the same person who asked earlier.
Yeah.
So you're trying to now complicate and involve me in these procedural dilemmas. Sir, the basic proposition remains same. Whether you have post IMS, pre IMS, the Act does not put such conditions. This is only procedures. My larger answer remains same in this particular case also.
Okay. That's all, I think.
एक last question, Gaurav bhai.
Sir,
What do you think about this 148A? Like,
मैंने बताया,
we
I
have
can
already
tell you
discussed.
lot of business coming up for professionals. 148A will
This will
be,
again create a mess.
it will be bigger than e-invoicing and e-way taken together, because now you are going on a item or good level reporting. So per item of goods, if you are putting into the server of the country, think about what are we doing in the country, the quantum of data we are sitting in. Tomorrow, it can be told that a particular watch, which is maybe, take any brand, any luxury brand, it can be traced up to the level of the buyer, from when it was imported and which buyer has it.
But I believe that this will like totally disturb the supply chain management of the companies. We're putting these unique numbers. It will take a lot of time. It's not going to be automated.
See, that is why they have introduced a third party agency. Now you are required to pay for that system.
They are going to give business to some other third party.
And more importantly, I think there is some element of disfaith, which has, again, we are going back to inspector. आज आपको याद होगा, एक्साइज के दिनों में जब भी गुड्स निकलते थे तो एक इंस्पेक्टर या साइन करता था.
Sign it, yes.
So what is the difference between that particular manual inspector sitting and this system now coming into place? Government, I am not saying that they are wrong. There was a past of fake invoicing. Businessmen took a lot of fake invoicing, but that was a small number. The country, when you look at the budget numbers, so I was very pleased to see the total tax revenue which they have budgeted is 42,70,000 crores, which is now almost 3.5 lakh crore per month, taking direct and indirect taxes together. In a country where we are sitting with such a thing, where our tax deficits are going down from 2% to 0.8%, I'm talking about the primary deficit. I don't think we need to go into stricter. We should be happy to see that our tax kitty is increasing, our deficits are reducing. When there is such a beautiful picture of the country which we are projecting, we are telling everyone, what is the need of squeezing out so much procedures out of everyone? Let this 42 lakh crores increase to 48 lakh crores. I understand, not far ahead, in another 2 years, but procedures might trouble everyone. That is
and even the heading of section, track and trace mechanism.
Correct. So whenever now you will be buying a luxury watch after 2 years, Avinash bhai, government will be knowing it is coming to you.
So you mean to say that it is going to be item wise or it is going to be package wise? For example, if goods are being transported, it has 100 items into it in a package. So पूरा पैकेज पे एक यूनिक आइडेंटिफिकेशन लगेगा, मार्किंग लगेगा, या एक एक आइटम पे 100 आइटम्स पे लगेगा? वो दैट इज नॉट क्लियर.
Sir, it is saying the government may, on the recommendation, notify by notification specify the goods
Correct.
to which the provision apply. Now, provide a system for enabling fixation of UIM and for electronic storage and access of information contained therein through such person. Prescribe UIM for such goods.
Each item.
Just for goods. You will be aware how many iPhones are sold in India after 2 years and where exactly who is the buyer of that particular iPhone. So that kind of system we will be having. देखते हैं सर जितना ये कॉम्प्लिकेट हो रहा है चीजें. I think and I give you why I was saying this. In the last 2 years, we have come across many cases where the export refunds have been taken, and this is very sensitive issue. But that was a very small kitty of evaders. What they have done is they have exported the low quality items
Correct.
in guise and taking the ITC of high quality items. So they bought iPhones, they bought Samsung high-end phones, they exported some, I don't know what, dummy phones or whatever. But
Correct.
they have taken that particular refund. Now, if this UIM is in place, that particular gentleman, the phone has traveled to which buyer? That mechanism will be tracked. That invoice will now not be tracking to, or will not be coming to this gentleman. But yes, having said and done, सब चीजों की problems अलग-अलग हैं. आने वाले time में these mechanisms, what all we will find in terms of compliances, a good level compliances is huge. So let's see.
सर इवन एक मुझे जस्ट एक मेरा अप्रीहेंशन है, बिकॉज हमने मैचिंग ऑफ इनवॉइसेस इंट्रोड्यूस किया 17 में. 2025 में वापस से वी आर ट्राइंग टू री अटेम्प्ट दैट. नाउ वी आर कमिंग आउट विद दिस ट्रेस एंड ट्रैक. वेदर प्रैक्टिकली इट इज फिजिबल, मुझे नहीं लगता, पता नहीं. दिस माई बिलीफ. गवर्नमेंट में थिंक कि वो कर सकती है, थर्ड पार्टी पे रिलाई करके कर सकती है, एंड इन दिस कंट्री इट्स डिफिकल्ट. Anyways,
See, I have no
this
comments.
is too early to comment unless we see
Yes, but
notification.
my simple proposition is, why are we disbelieving people when we are on 42 lakh crores of tax? It is a collected tax. What we are trying to save from this trace and track, maybe some odd 10 or 15,000 crores, is the kind of effort which country will put in into 10 or 15,000 crore in tracing and tracking. Is it worth, or should we focus on relaxing everything and increasing to 48 lakh crores?
Correct.
That is the larger question which everybody should look at.
I think there are a few more questions. We have time, so
Pramoji, I think Gaurav ji has to leave for a session.
okay,
Because उन्होंने मुझसे कमिटमेंट लिया था.
okay.
So if he has time, then
And nahi, but request tha, but yes, I would love to. But Avinash bhai, you know that.
yes, I understand. So,
तो ले ले सर एक बार.
Avinash bhai बोलेंगे तो दूसरी जगह लड़ाई कर लूंगा मैं.
नहीं नहीं नहीं,
नहीं नहीं ऐसा नहीं.
वो भी इम्पोर्टेंट है सर.
ठीक है
आप
ना?
No issues. We'll
on a
take
such a
up this
short
issue.
notice आप agree किए, that is sufficient for us, more than sufficient for us.
I would just like to hear if Avinash bhai or Vishal bhai is adding something to this.
नहीं, actually now we'll start with this income tax one. Jignesh ji is already there.
ठीक
And we'll have another session on Tuesday. I'll request Tuesday evening, Ashu bhai will be there. तो अगर possible है तो you also join, and then we'll take a discussions and lot of discussion in that forum. Around
Tuesday
7,
evening,
Tuesday
7 is
6 to 7:30 it will be direct taxes, and 7:30 onwards it will be discussion on indirect tax. So we three can join, and Vishal also can join us.
Okay.
Okay, sir. Thank you so much. Thank you for your time.
was a bit.
Thank you.
Okay. On behalf of Ashwa Legal, certainly thank you, Gaurav bhai, for joining this session. Thank you very much. And we now move over to our direct tax session. So for that, we have Advocate CA Jignesh Parikh ji with us. He is a chartered accountant by profession for almost 15 years and now practicing as an advocate. He has delivered more than 150 lectures on various topics, income tax. With that brief introduction, I request Jignesh Bhai to take over the mic and start the deliberations on direct taxes. Thank you.
Thank you, Avinash Bhai, for allowing me to present my views on this Finance Bill 2025, so far as it relates to the income tax proposals. It is indeed a matter of proud and privilege to be here to deliver my views on this finance bill. One can say it is one of the best budget so far as income tax is concerned. They have kept the middleman in center, made a lot of amendments, roughly around 86 amendments. We will deal with the key amendments which are relevant and which would impact a majority of the citizens, or can say majority of the assessees. Now, with this note, let's start with the first amendment, which is the change in the slab rates. I will not go precisely with the rates which have been changed, because that is now known to everyone. The crucial part here is that now applying section 87A rebate, what they have done is they have stated that up to 12 lakhs of rupees, there will not be any income tax payable. So if you are a salaried person, of course, the limit will be 12,75,000 on account of the standard deduction. But if you are not a salaried person, then your income limit is going to be 12 lakh, which is a very positive change, a great change, jumping from 7 lakhs to 12 lakhs, much needed change. And it will definitely have a great impact on almost all the taxpayers. Of course, as the rates have also been, the slabs have also been relaxed up to 8 lakhs, 5%, then up to 4 lakh nil, 8 lakhs, 5%, then 12 lakhs of rupees, 10%. So definitely, up to 24 lakhs, the rate is kept as 25%. And then it goes beyond 24 lakhs, it will be taxed at the rate of 30%. So this is one of the most welcome change. Here they have clarified one thing, that so far as incomes which are going to be taxed at a special rate, that could be a section 111A income or 112 income or 112A income, they will not be eligible for section 87A rebate. That is something which has been categorically provided. So if I have got an income, let's say from pension, from house property, from salary income, or maybe income from other sources which are not going to be taxed at a special rate, those all particular incomes will enjoy the exemption up to 12 lakhs. Of course, one can here take, but one has to rather make it a point here that they have not relaxed the requirement of filing return here. So let's take an example. My income is 8 lakhs of rupees. I am a practicing chartered accountant. My income is, let's say, 8 lakhs, or I am a doctor. My income is 8 lakhs of rupees. In that particular case, I am supposed to file return of income because my income has exceeded the basic exemption limit, which here is 4 lakhs of rupees if I go for 115 BSc. So that has crossed it. So I am supposed to file my return of income. There's no relaxation over there, but my income will not be taxed. So that is something which has to be kept in mind. A very welcome change, I would say. Second amendment, which is relevant, is section 80CCD 1B. We know that if we make a contribution to the National Pension Scheme NPS, then we are entitled to a deduction of 50,000 rupees. Now government has introduced NPS Vatsalya as well. If a contribution is being made to NPS Vatsalya, that will also qualify for deduction under section 80CCD to the parents in case the investment is made in the name of a minor children, subject to, of course, overall limit of that 50,000 rupees. So these are the few changes which relates to the deduction part of it, slabs. Going ahead, another set of change is with respect to income from house property. The existing provisions deals this wise. Section 23 of the Act relates to determination of annual value. Now, subsection 2 of the said section 23 provides that when a house property is in the occupation of the owner for the purpose of the residence, or owner cannot actually occupy it due to his employment, business or profession carried on at any other place, and he has to reside at that other place in building not belonging to him. In such case, the annual value of the such house property shall be taken to be nil. So section 23, which deals with the computation of the annual value of house property, says that the computation, the annual value shall be nil if certain conditions are satisfied. I am not in a position to occupy the house property because of my business or profession in some other city, and I am staying there in some other house. Now, while this amendment, they have done a very wonderful thing wherein they have relieved. I mean, they're completely done away with this condition. Now, no, this conditions is not required to be satisfied. So, if I am having two houses, then the annual value would be nil. I'm not supposed to satisfy any condition. So, this is certainly a good move towards simplifying the provisions. Sometimes it may so happen that I have a house. Let's take an example. I have a house in a city, but I am not in a position to occupy that house because I am living in a quarter. Probably the section 23 benefit may be lost. Now here, no such conditions are to be followed. So once again, a welcome move. With a view to simplifying the provisions, what they have proposed is to amend subsection 2 so as to provide that the annual value of the property consisting of a house or any part thereof shall be taken to be nil if the owner occupies it for his own residence or cannot occupy it due to any reasons. So for whatsoever reason, if I cannot occupy, the annual value would be nil. I will be entitled to the benefit. Now, going ahead with the next one is section 1010D benefits. Now, section 1010D, we know that section 10 is an exemption provision. It deals with the provisions, it deals with the incomes which are exempt. In section 1010D talks about the insurance, the amount received from the insurance companies. Now, there are certain exceptions. If we look, I mean, if we start it from the beginning, then we are aware that if whatever the proceeds that comes from the insurance company along with the bonus, that is not going to be taxed. Then certain conditions were added to it. For an example, the premium should not exceed certain percentage, then the percentage limit was reduced. Then they came up saying that, okay, your premium should not be more than 2,50,000 rupees. So all those conditions came up. Now, what the current law, if we talk about, now if we look at from Finance Act 2021, so Finance Act 21 introduced a monetary cap on the premium payable in respect of unit-linked life insurance policies, which we will call it now ULIPs, disallowing exemption if the premium payable for any year during the term of the policy exceeds 2,50,000 rupees. Now, if the ULIP is issued on or after 1st of the February 2021, and if the premium exceeds 2,50,000 rupees, in that case, I will not be able to get the benefit. So they stated that, okay, it will form part of the capital asset, and they have further classified that it will be covered under 112A, that is equity oriented mutual fund wala definition, it will be covered. So I'm just taking both the things together side by side. Now, one more thing. After the Finance Act 2021 amendment, the exemption to ULIP is allowed under section 1010D, as I mentioned, if the premium for such insurance policy exceeds the specified monetary limit, that is high premium policies, or 10% of the sum insured, that is excess premium policies. Further, in the Finance Act 2021, ULIPs were included in the definition of a capital asset, clarifying the income from the ULIP shall be taxable under the head capital gain. So that is once again in Finance Act 2021, they have done this. However, for the other life insurance policies other than ULIP, only percentage threshold remained, and there were no clarity as to under which head the income would be taxable. Now, the Finance Act 2023 made this change. Finance Act 2023 introduced a monetary limit on the premium payment for other life insurance policies. That is, now we are talking about other than ULIPs. They say that where high premium or excess premium insurance policies will not be eligible for exemption. The excess premium policies, premium of more than a specified percentage of some amount, have already been excluded from the definition of exempt income, and the high premium life insurance policies will be issued on or after 1/4/2023 have now been excluded from section 1010D. So it will be taxable. They have stated that in a income from other sources. Now, they have, in order to provide parity to the non-residents availing life insurance from the insurance offices of IFSC vis-a-vis other foreign jurisdiction, it is proposed to amend. Now, what is the amendment coming by Finance Act 2025? They propose to amend the clause 10D of section 10 so as to provide that proceeds received on the life insurance policy issued by IFSC insurance intermediary officers shall be exempted without the condition relating to maximum premium payable on such policy. So the premium restriction of 2,50,000 rupees or 10% or 5 lakh, all those conditions will now not be applicable if you are a non-resident and if you are acquiring insurance policy from an insurance office in IFSC. In that particular situation, the exemption shall continue. Now, another area of amendment is in relation to the trust. Since last 3 years, if you look at the budget, then they are making amendments in a way it looks like, or one can say in a lighter note, that government has probably no trust on trust. However, luckily, this time they have made 3 major amendments relating to trust, and all those amendments are welcome amendments, much needed amendments. Now, first is in relation to a registration of a charitable trust or institution. We are aware that as per the current law, a trust is required to be registered if they have started, if they are existing trust, if they have started an activity, they have to go for a regular registration. If they, after 5 years, they have go for regular registration, they have to get it renewed after 5 years. If there are new trusts, they have not started an activity, go for provisional registration. After carrying out a provisional registration, go for a regular registration. Then it will be for 5 years. After 5 years, you'll have to get it renewed. If you are a provisional one, not even started activity, then at least 6 months before completion of 3 years, you have to go for the registration again. Now, this includes a kind of a compliance burden. To overcome this, they have said that if you are a small trust, meaning thereby, if your income without applying provisions of section 11 or 12 does not exceed 5 crore rupees in any of the last 2 years, in the last 2 years, last 2 previous years, from the year in which you are making an application, in that particular case, the period of 5 years will be treated as period of 10 years. So then the period would be, now the question that really comes is that, let's take an example. Today, I am going to make an application. Let's say I made an application on 1/4/2025. Now the point is that my income for the last 2 years does not exceed 5 crore rupees. No, so far so good. I made an application. Now I have been granted a registration. Now this registration will be valid for 10 years. Because this registration is granted to me, it would be valid for, assuming that my registration is clause 1 to clause 5, because this is applicable if the registration is made in clause 1 to clause 5, meaning thereby either it is a regular trust, the trust is, of course, the time will be to regularize, for existing trust to regularize registration, the dates were extended and now the dates have expired. We have to make an application for condonation of delay. After the delay gets condoned, we can get the registration. That is okay. Now my concern is that if I have got in clause 1, clause 2, clause 3, clause 4, or clause 5, if I have been granted registration now, and that is coming for 10 years, let's take an example. Now, thereafter, if my income exceeds from 5 crore to 10 crores, or the particular threshold limit is being crossed, in that particular case, what would be a scenario that is not clarified? So it appears that as of now, I will be eligible, or probably we may expect some amendment or some clarification to come in a time from now. So that is the one benefit for trust. Second is, they have made this benefit for section 12AB. No corresponding benefit in section 80G has been made. So of course, I will be eligible for, I am already a registered trust. My 5 years are about to over. Now I am going for a re-registration. I have to go for a re-registration. I get a registration for 10 years. So अगले 10 साल तक मुझे वहां नहीं जाना है. लेकिन let's say ATG, तो ATG के लिए मुझे हर 5 साल तक जाना है, तो corresponding amendment ATG में नहीं करा गया है. It would have been a great if they have amended ATG as well parallelly. Now we are aware that last year they have made some amendments and wherein they have given a power. If there are minor deficiencies in the application, in that case as well, the registration can be cancelled. So now they have amendment and they have carried out a welcome amendment. They say that if the application, that is if you refer to section 12AB4, they say that the proposed amendment suggests that the deletion of the phrase is not complete or from clause G of explanation to section 12AB. So meaning thereby cancellation of proceedings can no longer be initiated solely because the application is incomplete or incorrect information. So for those particular purposes, my registration cannot be cancelled. That is once again a positive move. So that for that small issue, small defect, my registration will not be cancelled. Now another amendment is with reference to a definition of a specified person. Now, if we are aware that if there is a trust, if I give a donation and my donation is, let's say, my total contribution is 50,000 or more across all preceding years, then I am considered as a specified person. The law thus stands today, which provides that if my donation to a trust across all the last year preceding years cross 50,000, I will be a specified person. So they have to provide details of a specified person, the relative of the specified person, the concern in which the specified person has substantial interest. All those details are required to be provided. Now, of course, this becomes a very tedious task. So they have made two amendments. One, you are not supposed to, I would be treated as a specified person only if the limit is increased to 1 lakh of rupees for contribution made during the relevant previous year, and aggregate limit of 10 lakhs. So the last limit was 50,000 in aggregate, 1 year aggregate सब कुछ मिला जुला के 50,000. अभी उन्होंने कहा कि एक साल में 1 lakh and aggregate limit is going to be 10 lakhs of rupees. If that is the case, then only I'll be a specified person, and the relative of the donor will not be a specified person. A welcome change. And any business or entity in which such donor has a substantial interest, even that will also not be considered, or that will be excluded from the definition of the specified person. So that is once again a welcome change, because there was a lot of compliance issues coming out on this. So they have categorically provided that in those cases the gentleman will not be considered as a specified person. Another series of amendment is with respect to TDS. No new TDS as such has been imposed this year, because since last 3 years, if we really look at the budget, they have a tendency of coming up with a new TDS every year. Of course, the 194T, I am well aware that they have introduced last year, and that this starts applicable. The applicability starts from this year. That is, but that is a creature of the last year. This year onwards, this time they have not come up with any new TDS. On the contrary, they have relaxed the provisions. So if you look at the provisions, let's say the threshold limit for interest on securities, the current threshold is 0. That has been increased to 10,000 rupees. Interest payable to resident individual, HUF, or any debenture issued by public company, 5,000 increased to 10,000 rupees. Dividend 5,000 increased to 10,000 rupees. Similarly, in all other sections, they have made changes. So I'm not really dealing with the each and every one, because it is directly available. One can go through that. The major one that is affecting is rent 2,40,000 during the financial year to 50,000 per month or a part thereof. So this is something, a change which has to be kept in mind. Rent 240 during the year. So earlier it was 2,40,000 rupees during the year. Meaning thereby, let's say I have given my property on a rent. The rental is, let's say, 80,000 rupees. I have given it on a rent, let's say, in the month of February only. So 80, the total is 1,60,000 rupees. I am not supposed to deduct the TDS on it, because the total does not exceed 2,40,000 rupees. Now, by virtue of this current amendment, they said it is 50,000 per month or part of a month. So if, let's say, 80,000 rupees 2 months rent, 1,60,000 rupees, it crosses the limit of 50,000, TDS is required to be deleted, because the limit is changed from 240 during the financial year to 50,000 rupees per month or a part of the month. So that has to be kept in mind. Putting it differently, let's say I have entered a rental agreement whereby I'm entitled to receive, let's say, 5 lakhs of rupees rent for the entire year, like 40,000 rupees per month, let's assume. And in that particular case, entire rent comes to me in the April itself. Once again, the total does not exceed 6 lakhs of rupees. And one can say per month it does not exceed 50,000 rupees as well. So there won't be TDS. So here the limit is 50,000 per month. That is what is to be checked. The total limit is not to be checked. 50,000 rupees per month. That is what is something that has to be kept in mind. Because while the budget was being announced, the Honorable the Finance Minister has made a statement that 6 lakhs. So that particular one has to be careful while, really looking at those particular provisions. 194J, 30,000 to 50,000 rupees. Then income in respect of the units of mutual fund, 5,000 to 10,000. Compensation on account of compulsory acquisition of immovable property, 250 to 5 lakhs. So these are the changes which have been made where the threshold limit has been included. Threshold limit has been changed. Now, one very welcome change which has been made, and there was a huge hue and cry even when the section came. TCS on sale of goods. We are TCS on sale of goods if that sale exceeds a particular limit. And then we have a TDS if the purchase exceeds from a particular limit. And then there was a clash whether TCS would be applicable or TDS would be applicable, and a lot of compliance issues were there. So a very welcome change that they have made. They stated that section 206C1H, TCS on sale of goods will not be applicable with effect from 1/4/2025. So from 1/4/2025, 206C will, of course, 194Q will be there in place, but 206C will not be applicable. Second is the conditions of higher TDS. That was one of the major issue, and that was also creating a lot of compliance issues and administration. I mean, compliance issue, not on an administration, but the compliance issue on the part of the assessee. So that has also been taken care of. That the condition for higher TDS rate applicable at the rate of 20% for non-filers of return of income is removed. So if you are a non-filer of return, then 20% condition will not be there, which means that the higher rate of TDS, TCS at the rate of 20% will apply for those non-furnishing of PAN only. So if you are not furnishing PAN, the 20% will be there. But then if you are not filer of return, then even that condition has been taken away. So all those sections creating problems are being taken away. So I would say a very, very welcome change. Another change which is relevant so far as TDS and TCS provision is concerned, that the threshold for collecting TCS on remittance made under liberalized remittance scheme, LRS, has been increased from 7 lakhs to 10 lakhs. Earlier the limit was 7 lakhs, now it has gone to 10 lakh. And so far as an education is concerned, that remittance for education purpose for which the remittance is out of the loan taken from a specified institution, in that particular case, the TCS has been completely removed. So once again, that is going to be a great advantage. That is once again a very welcome amendment. Another major change which has been made, of course, this change is in favor of revenue, but then this change is very much important change, very much needed change. We are aware that losses can be carried forward for 8 years, subject to certain exceptions. If I have a business loss, it can be carried forward for 8 years. Now, let's take an example. This is my 8th year or 7th year, and I have all doubts that I would not be able to carry it forward. I will go for amalgamation. So if the amalgamation is being carried out, then the amalgamated company would be able to carry forward the accumulated loss of the amalgamating company for the fresh 8 years. So one of the reasons for the business restructuring was precisely on account of this, precisely because to carry forward the losses, or you can say evergreening of the losses, was that particular situation. To avoid this situation, or to put a full stop on evergreening of the losses, they have stated that now if amalgamate A Limited is an amalgamating company, it gets amalgamated to a B Limited. In that case, A Limited has got a losses, let's say the losses which were 6 years old. So the amalgamated company will be able to take the benefit, but only for 2 years, not more than that. So you cannot carry out evergreening. If you have some, so if you are carrying out amalgamation precisely for the purpose of evergreening of the losses, then those motive would fail. So once again, a welcome amendment. If you are carrying out amalgamations or business restructuring for other synergy purposes, for the other advantages, for the other valuation purposes or business advantages, that is welcome. Nobody has any doubts. But then if for this purpose, under the, for this purpose of carry forward of losses, the amalgamation or restructuring which was being done, they have put a complete ban. I mean, they have indirectly they have stated that now there won't be any advantage if you are really doing this. They have made some amendment relating to search. Actually, there was an issue. Section 158BB provides that how to compute the undisclosed income. There were certain anomalies while they have come up with the definition last year. Now they have made it clear that how that undisclosed income is required to be calculated. So if you really look at the section 158BB of that provides the methodology for computation of the total income of a block period. It is proposed, what they have proposed is they have proposed to amend clause 1 of subsection 1 of the said section to substitute reference to the total income disclosed with undisclosed income which has been declared in the return. So once again a very welcome move that how to compute undisclosed income. पहले उन्होंने बोला था total income, take the total of everything, then reduce the income disclosed in the return. Now nothing to be done, all those things. You have to straightway take the undisclosed income. That would be the base. So that is once again a welcome move, welcome clarification. Time limit for completion of the assessment. Originally, it was proposed to be made to 12 months from the end of the quarter in which the last authorization was made. तो यहाँ पर 2 महीने का आपको time मिला है ज़्यादा. Otherwise, it was a last from the end of the month in which the authorization was made. So now they have made it to quarter. Next amendment is with reference to updated return. We know that the updated returns can be filed up to 2 years from the end of the relevant assessment year. Of course, we have to pay some extra amount, that is 25% for the if we file after end of 1 year, 50% for the second year, 60% for 3 years, and 70% for the fourth year. The amendment is welcome because now I can file it up to 4 years, number one, and number two, this is technically speaking a relaxed version. I would not relaxed version, I would say technically speaking a kind of a permanent version of Vivad Se Vishwas, that you feel that this may cause Vivad and now you want to rectify your mistake, then definitely you can go and file your return. So this amendment is once again a very, very welcome amendment. And now they have made some minor changes with regards to passing of the penalty orders that they have made. So these are the few minor changes that they have made with reference to a penalty, wherein they have said that penalty order for assessing officer is to be like section 275 deals with the passing of the penalty order. They have stated that the penalty order will now be passed within a period of 6 months from the end of the quarter in which the connected proceedings are completed or the order of the appeal is received by the principal commissioner. Certain penalties can be passed, order can be passed by joint commissioner only. They say that now AO can also pass those particular penalty, but if it requires an approval, then the approval of the higher authority is required to be taken. But once again, the amendment, the penalty orders are to be passed by the AO. So these are the major changes which are really relevant and relevant from this budget. Of course, I would say this is precisely a tailor because the movie is yet to come. The movie would come in the form of an income tax bill. Let's say that they are planning to reduce the excise to a 50%. Let's see how it comes, whether it really simplifies it or they come up with the the another series of litigation. That is what we have to see. But definitely there won't be any problem. We will be dealing with this. So of course this time, of course, as such there were 86 amendments, but then as I mentioned, the other amendments were not that relevant, so I really didn't touch upon those amendments. I really deal with those amendments which are really important to everybody in day-to-day life. For example, there's an amendment relating to tonnage tax. 10 to 12 amendments are made relating to tonnage tax where but then effectively they are not applicable to us or probably majority of us, so I have not covered those particular aspects in this presentation, but then rest all amendments, major amendments to my mind, I have covered. Thank you very much, sir, for this opportunity. Over to you, sir.
Thank you, Jignesh bhai. Thank you for your session. I think we've covered the direct tax changes very precisely. So we'll see if there is any questions here. Then think we do not have any question so far on this. So maybe Avinash bhai or Vishal, if you can take any questions.
There are some questions
Okay,
in YouTube live.
okay.
Any representation to government regarding reduction of TDS under section 94T?
I am not really aware about the representation, if at all, that has been made. But then this budget is silent on this.
Okay. So the second question is whether marginal relief is available after 12 lakh or not.
It is.
So the third question is registration of trust expired in AY 25-26 and gross receipt is less than 5 crores, whether apply for fresh renewal or suo moto approved for another 5 years?
No, when we have to apply for 5 years, thereafter it will be given a registration for 10 years.
Okay, sir. All the questions are also completed from YouTube also.
Yeah, I think there are a few questions here in you.
Yes.
So now, any update in budget on 43BH for MSME?
No.
Okay. 194T, can you explain the practical application?
Give me a minute. Let me connect to the act. Give me a minute.
We have the finance bill. You want that?
So section 194T, that is inserted after 194S, and it is inserted by Finance Act 2024, effective from 1/4/2025. So the first controversy was, will it be applicable from 24-25 or 25-26? To my mind, it is applicable from financial year 25-26. It will not be applicable for financial year 24-25. That is my take on this. It is basically payment to partners of firms. So that is remuneration. That is what we are getting on a partnership firm. Any person being a firm responsible for paying any sum in nature of salary, remuneration, commission, bonus, or interest to a partner of the firm, sell at the time of credit of such sum or to the account of the partner, including capital account, or at the time of payment thereof, whichever is earlier, shall deduct the income tax thereon at the rate of 10%. And no deduction shall be made under subsection 1 where such sum or aggregate of such sum credited or paid or likely to be credited or paid for the partner of the firm does not exceed 20,000 rupees during the financial year. Now, the issue which are relevant here is the issue number 1, the year from which it is applicable. So, according to me, it is applicable from financial year 25-26. It is not applicable from financial year 24-25 because it is categorically provided it is applicable from 1/4/2025. Number 1. Number 2, the point is that when to really deduct TDS, because the section says that the tax is required to be deducted. They say that at the time of credit of the sum to the account of the partner or at the time of payment thereof, whichever is earlier. Now, this is a crucial why we are aware that credit and payment, that is not a big deal for us today. That is not something which is big. The problem is, let's say I am a partner in a partnership firm. My opening balance, the opening capital balance stands, let's say 20 lakhs of rupees. Now, every year I am making a withdrawal of, let's say 75,000 rupees. The total withdrawal turns out to be 9 lakhs of rupees. Now, in this particular case, assume that my remuneration is 10 lakhs and my share of profit is also, let's say, 5 lakhs. So now, end of the day, my balance would be this wise. 20 lakh was my opening balance. I withdrew 9 lakh. Now, my remuneration, which was credited end of the year, was 10 lakhs. So 20 minus 9, 11, 11 plus 10, 21. And share of profit, let's say 5 lakhs. So 26 lakhs is going to be my balance. Now, here it was a vanilla question, because one can say there, or I can safely argue that whatever withdrawals I made were out of my opening balance. So it will not require any deduction of taxed source of payment or credit. All payments came to me out of opening balance. Nothing came as remuneration. So definitely the TDS will not be applicable. Let us take an example, the same example. My opening balance was 0. Now payment came to me. Let's take an example, 9 lakhs of rupees. Remuneration credited 10 lakhs and share of profit came 5 lakhs of rupees. Now, here the issue would be that I have deposited, I have got a credit of remuneration at the end of the year, but my capital account was negative from the day one. So in that case, was that 75,000 which I used to receive, will that be, I would say, will that be, let's say the 75,000 that comes, will it be against remuneration or will that be against a profit? Now, once again, it would be difficult, because during the first year or first month, second month, third month, for me to judge what would be my remuneration and what would be my profit. So that is something that would cover some kind of a controversy. So it is to be taken care of, it is to be seen. I mean, practically that will have some kind of a calculation. So every partnership firm, or probably every partner, has to sit at least to keep in mind what is going to be the withdrawal from, whether the withdrawal from the capital balance or it will be from a remuneration. So, to avoid this kind of a complication, if we can estimate our profit for the year, if it is practically possible to estimate the profit, and if we realize that, okay, this much amount is going to be credited towards the remuneration this year, assuming that we meet our target, and we do not have sufficient opening balance to take a corresponding withdrawal, certainly in that particular case, we should go and deduct the TDS at the time of payment itself. But then it has to be backed by some kind of a calculation. If at all let's take an example. I anticipated that I will have a profit of 15 lakhs of rupees share of profit, and my remuneration is 10 lakhs of going to be 10 lakhs of rupees, totaling to 25 lakhs of rupees. So I withdrew, let's take an example, 50,000 a month, and this entire 50,000 will go from my share of profit. It is nothing from remuneration. I've kept remuneration as it is. I have a valid argument to that, and I may deduct TDS at the end of the year. There's absolutely no problem to that. But let us assume, putting it differently, my expectation turned to be wrong. I kept on withdrawing 50,000 rupees. My remuneration turned out to be 5 lakhs. Share of profit turned out to be, let's say, 2 lakhs of only. In that case, I am only exposed to interest. There cannot be any penal consequences, precisely for a reason that I had anticipated a profit. Ultimately, it didn't happen. My year didn't work as per my projection. It was a reasonable cost. When there was a reasonable cost, there cannot be a penalty. So that's how you can deal with section 194T.
Okay, thank you. Think another question. Senior citizen bank FD interest up to rupees 1 lakh is exempt.
Hmm.
Right. That's no question. In case of drawing by a partner from his capital account, whether 194T is applicable, I think you have explained it with examples. Extension of registration of 10 years will be applicable for the existing registration which was provided for 5 years earlier, or 10 years registration will be provided for new application of trust.
So as of now, the way the amendment is proposed, it appears that it would be for a new application. This would be the application which are going to be made on or after, I mean, for the certificates which are going to come on or after 1/4/2025. So let's say I may make application today, certificate may come after 1/4/2025. So for those certificates, it may so happen, or probably some clarification may come, because if you are already registered, why should you? Because see, the amendment has come at this moment when the 5 years are about to over. So it is a time for a re-registration. There is no logic behind once again throwing you towards the registration. So some clarification we can expect, that all those trusts which have been granted registration for 5 years, if your income do not exceed 5 crore rupees, then this 5-year registration will be deemed to have been extended for 10 years. This kind of a clarification or notification ideally should come. And I mean, as the way the budget is drafted, the answer is nothing is automatic. But to my understanding, this should come, because the logical intent behind this amendment is to avoid the compliance burden. Then when you want to avoid a compliance burden, why to avoid after 5 years? Why it cannot be done today? What is fun in doing it today? What is fun in not doing it today? So some clarification may come in a time to come.
Then another question on 87A, rebate is not allowed for capital gains as said in the budget speech. will it be applicable for assessment year 26, 27 or applicable for assessment year 24, 25 and 25, 26 also?
No, to
Since,
my mind, it will be applicable henceforth only. It should not be applicable for the previous, because for previous years the law is very clear.
since the Bombay High Court judgment says taxpayers should be given the option to file their ITR with section 87A rebate claim.
That's what I'm saying. The law is very clear so far as the previous years are concerned.
Yeah. Any amendment regarding taxation of unlisted shares?
No.
Okay, one question is on Gujarati, maybe I cannot read it. Maybe Shailene or Avinash Bhai, if you can read that. MSME ma, I'm not able to read it. Sorry.
It
Date
is same
of
question which was
change of-
asked in English, that whether there is any amendment relating to 43BH.
Okay,
No, there is no
all
amendment.
right, okay. Date of effective change for MSME criteria.
Sorry?
Date of effective change for MSME criteria.
I will check and get back to you on this, like 43B, long time I read. I'll check and get back to you on this. I'll drop a message to Avinash Bhai on this.
Sure.
So what I understand is the question is that which is the relevant date to check whether I am medium or small enterprise, right? Not the financial limits.
Right.
Okay, okay.
Okay, I think that's all on direct taxes. There are a few questions on GST. Maybe you want to take up, Avinash ji? Should I?
Couple of questions, if and Vishal can take up that questions. That's not an issue.
Yeah.
But prior to that, I think we should
Yeah, I think
share our gratitude towards Jignesh Bhai for sparing his valuable time. In
Yeah.
such a short notice, he agreed and accepted the request.
So it
Yes.
is a matter of pride for me to be here to deliver a talk. Had you not called me for this, I would have spent this Monday morning with friends going outside, and the budget I would have never read it. It's because of you that I could go through the budget. I could prepare my notes on it. So my all thanks to you.
Sure. I think
Thanks.
Jignesh Bhai, on behalf of Ashwa Legal, we certainly like to extend our heartful thank for coming here and sharing your knowledge on the changes on direct taxes in the budget. So I think we look forward to have more sessions.
Thank you.
And
Avinash Bhai would agree with me on a point that sir, आप वो सीए होने के बाद दो ही occasion होते हैं जब हमें पढ़ने का चांस मिलता है. एक तो क्लाइंट को शोकोज नोटिस आता है तब, और दूसरा जब हमें लेक्चर देने का चांस मिलता है. So I mean both these opportunities are to be grabbed.
thank
It's
you.
a fact, sir, because this is my experience also, that after coming to this side of advocacy, I stopped completely getting updated on a daily basis on the routine matters. जो matters आते हैं बस वही पढ़ते हैं, जो issues आते हैं उसी पे research करते हैं. That's unfortunately this is what is happening.
तो ये लेक्चर की अपॉर्चुनिटी से ये फायदा होता है कि वी स्टे रिमेन अपडेटेड, और वो एक सेक्शन के बारे में और 4-5 सेक्शन का क्लैरिटी आ जाता है.
Correct, sir. Correct.
Thank you very much, sir. Thank you very much.
Okay, thank you.
Thank you for the. Thank you.
So I think we've come towards the end of the session, but we do have a few GST questions.
Yes, 5-7 minutes. We can take up some of the questions. Vishal Bhai is there.
Yeah.
I think Shefali Ma'am is also there. So if some of the questions can be addressed by Vishal Bhai,
Yeah.
that will help us.
Should we first announce our Tuesday's webinar also?
Yes, yes, please do that. Shall I do
Pramod
it?
ji, if you could.
Yeah,
Yeah,
I
please.
think,
आप कर दीजिए.
Yeah, आप कर दो sir, Avinash ji.
Tuesday, we are again having a budget session. We'll be discussing again from a different perspective, from a different speaker. So, Advocate CA Dr. Kapil Goel will be with us on Tuesday at 6 p.m. And then thereafter, we'll be having a very close friend and a close associate, CA Ashu Dalmia, who will be deliberating on indirect tax. Then, obviously, Shefali ji, Vishal Bhai, Pramod ji, Amish Bhai, and Gaurav Gupta. We all will be there as a panel. We all will be discussing on the indirect taxes proposals also, and not only proposals, but some of the implications of that. So it will be a blend of direct tax and indirect tax, and a discussion on the direct tax and indirect tax blending. So that is our endeavor. We'll also try to have one or two other speakers on direct taxes on Tuesday, so that they can also join hands with Kapil Bhai, and they can deliberate on some of the issues wherein multiple interpretations can be there. So at 6 p.m. on Tuesday, which is 4th of February 2025, we'll have a different session, another session on the budgets with a different perspective, because 3 दिन में सब लोगों ने पढ़ लिया होगा, mind apply कर लिया होगा, and they will have, maybe they will add to the perspective which they are adding today. So that is an announcement. So I'll request each one of you to please join. And let me apology, tender my apology also to each one of you, because there are some issues from the Zoom side today, and because of the Sunday we could not contact them for the upgradation of the system, although it has been requested 3 days ago, but it is yet to be updated. We'll make sure that by Tuesday this issue is not there. So kindly be with us on Tuesday. Obviously, we'll be having a restriction of not more than 1,000 registrations. So please be on time, join on time, so that you are not supposed to go to the YouTube and see that. Please be here in the Zoom with us, so that the questions can be asked directly from you yourself. Thank you so much. Please join on 4th of February at 6 p.m. Because Kapil Goyal, we all are aware, he is one of the giants in the income tax subject, and the Ashu Bhai is again one of the most sought speakers in the country when it comes to indirect tax. So please join, and please have a different perspective of the budget proposals.
Okay. I think
Yes, Vishal bhai.
now I will take up the GST question. So one is, common ITC reversal is required in case of supply of goods in SEZ warehouse before clearance of exports or to the domestic tariff area.
I read that question. I have a follow-up question. It is removal by whom? Is it removal by SEZ, or like we were talking about the amendment where somebody has stored goods in SEZ? Because this time amendment is with respect to goods which are warehoused in SEZ.
I guess Yash Panchalji is there. We'll just unmute him.
हेलो
Yes, Ji, can you speak?
हेलो सर ये जो
Yes, yes.
शेड्यूल सर ये शेड्यूल 3 के अंदर जो डबल ए नई एंट्री डाली है उसके अंदर सर हमें रिवर्सल करना जरूरी है कॉमन आईटी से
Yeah. Now, I was expecting to read some amendment in this budget, but at least I could not find that amendment. If you ask me in principle, see, there is one more entry, 8A, which is for warehouse goods which are cleared, and for that they have specifically brought that amendment in section 17, that reversal will be required for that. Now, if I go in principle, I find this SEZ matter very similar to that same case. In fact, that we can draw analogy, because 8A was the original entry and this is introduced as 8AA, correct? So this also shows that it has the same color of 8A. I personally understand that reversal should be required for this because it draws the same analogy with 8A. But I doubt that there is any such specific amendment in this budget.
ओके तो सर सेक्शन जो 17 सबसेक्शन 3 है उसके अंदर जो वैल्यू ऑफ एग्जेम्प्ट सप्लाई की सप्लाई है उसमें चेंज आएगा आने वाले टाइम में कि नहीं आएगा
Sir, that's why I'm saying my principal understanding there, it should be at par with 8A. So there should be a reversal required for this.
ओके ओके और सर आई हैव अनदर क्वेश्चन कैन आई आस्क
Sir, we'll keep it limited to budget. You may ask anything related to budget. That would
ओके
be more specific, sir.
ओके सर थैंक यू सर थैंक यू
Yeah.
Okay, thank you. I think Vishal, my next question is, many OEM issue debit notes for line rejection, etc., and ask supplier to get information from their portal and pay lesser amount to the supplier, also avail lesser ITC. What steps needs to be taken by the supplier as full details of debit note are not known to the supplier?
It's a debit note, na?
Yes.
Second, I think I have not understood the question. It should have been with respect to credit note, I suppose. 1 second. Is it yeah, on YouTube you are reading from?
No, on the
Because in chat
forum.
I could not find. Can you please repeat the question again?
Questions regarding GST. Many OEM issue debit notes for line rejection, etc. and ask supplier to get information from their portal and pay lesser amount to the supplier and also avail lesser ITC. What steps needs to be taken by supplier as full details of debit note are not known to the supplier? Actually, OEM
Sorry, I think I'm not able to understand the question. Avinash bhai, have you understood the question? Or is it a typo error? It should be credit note.
Rajesh Advani का question.
Is the person who had asked this question present?
He can raise his hand and then we can answer it. We can
Yeah.
ask.
Yeah, he's there. I'll ask him to unmute.
Yeah, we may take the other question till then.
Rajesh ji, if you can
हेलो
speak. Yeah.
हेलो विशाल
Please, sir.
हाँ नाउ टाटा मोटर्स और बिग यानी ऑटो मैन्युफैक्चरर्स व्हाट दे आर डूइंग इज दे हैव देयर ओन सप्लायर्स बट व्हाट दे आर डूइंग इज दैट the suppliers when they supply the auto parts to them for the line rejection they issue the debit notes and they put it on their
Yes,
own
sir.
portal.
Sorry. It is the accounting debit note, correct?
It is the accounting debit note.
Yeah, correct. So
Correct.
it means actually correctly from GST side it should have been a GST credit note, but you are saying that is not done.
No,
Only they are.
no,
Yeah.
no.
Okay.
That the supplier will need to issue the credit note. No.
Exactly. That's what I'm saying.
Now,
Fine.
now that is a big problem for them. What they are doing is that they are they are not putting any invoice number. They are putting their own reference number on the portal, and it is
Mm-hmm.
becoming very difficult for such suppliers to
Mm-hmm.
get the exact what you'd say knowledge about such debit notes, because payment is also made less to them. Are you getting me?
Sir, I'm getting you, sir. So
And
now,
now the issue is that suppose if I'm issuing a credit note, they are bound, they can reject also. So it will be a double whammy for me.
correct, sir. So now what is your specific question on
So
this issue, sir?
yes, so what steps this what you say suppliers need to take, because they have their means they have their own limitations. टाटा मोटर्स और ऐसे बड़े बड़े लोग तो उनको खड़ा भी नहीं करेंगे यानी.
Sir, when I studied this industry just 1 month back for one particular issue, I also found that majorly it is because of the SAP that these big industries are following. There are so many internal strict documentation required in these SAPs that is making these small rectifications or corrections impossible. And I believe this particular practice or procedure which is being followed is to counter or mitigate those things. So in fact, in one of our cases also where this matter had come to us, we had advised them that you need to revise or get the SAP module amended so that this could be incorporated. So I feel if I have understood your question correctly, it is more linked with the accounting aspect and also linked with the SAP modules. So I think this should be addressed by the respective industry. Otherwise, what you are saying is, sir, very appropriate. It is going to be very difficult in future to keep a track of all these amounts of line item rejections. I agree to your point.
Yes, it is absolutely and that becomes a huge cost for such what you'd say suppliers also.
Exactly. Sir, but there is more a challenge of the SAP of all these big industries that is
But
not
then
allowing the supplier to make these
uh,
changes. Yes,
correct. But there are many such what you'd say big manufacturers, and all of them are doing the same thing. And that is a main issue.
correct. Agreed, sir.
Vishal bhai, I
Yes,
think
sir, sorry.
Pramodji is left.
Acha.
Preoccupation.
Okay.
So I don't
So,
any other
any further
some of the
questions, sir?
common questions.
Hmm.
Some of the questions are that whether how they will get the link of the Tuesday session. So again, we'll be circulating the flyers and the link for the registration,
Same
and
like
we'll
today.
also make sure whosoever have registered for this session, we'll try to send a mail separately to them, or maybe a message separately to them, wherein they will get the flyer and then they can create a registration for themselves. So I think if Shefali ma'am is there, then she can take up.
I'm here. So with this,
Yes,
there
ma'am.
is nothing left for this particular session, and all of you are most welcome for our Tuesday session on the budget, where Ashu Dalmia ji and Advocate Kapil Goyal ji will be there to enlighten us more about it. And for the today's session, I would like to thank from the core of my heart to all of the participants who supported us during the session, in spite of a little, very small technical glitch from the side of Zoom itself. And I would like to thank all of our speakers and the moderators and the people who supported us, Vishalji and Avinash Bhai specifically, for handling all of the queries, Gauravji who has already left, and Jigneshji for deliberating on the income tax issues. And with this, I would like to close this session. Thank you so much, everyone.